My account's hitting brand new all-time highs. This has been the most glorious couple of weeks of trading ever. I'm going to show you exactly what trades we put on, what trades we've taken off, what trades we've rolled, and I'm going to do several of them live right here in the middle of this episode. So if that sounds good to you, if you want to learn to trade like a professional fund manager, you're in the right place. Let's keep going. So first up, we need to take a look at Zion. Let me turn back on my order blocks right here because Zion actually hit my midday emergency exit. I've had two of those last week, and this time I was not in the shower. The first two, I was in the shower. This one, I was not. I'm going to drop down here. We're going to see our friends from OVTLYR University in class, but I'm going to start ticking you guys off. Here we go. I think I'll still be able to hear you if you say anything for any questions. Okay. So why did I close this trade? Why did I close this trade? Well, let me introduce everything real quick and we'll get into it. Welcome to the OVTLYR Trading Room. This is where we help you save time, make money, start winning with less risk. So go ahead and subscribe if you haven't already. And we're going to go through the plans real quick. And if you want normal returns, this is not for you. But if you want OVTLYR returns, you're in the right place. Now, this is breaking news. Breaking news as of today. Mahesh wants to retire Plan A. Mahesh was like, Chris, do you even use Plan A? Do you think we need Plan A anymore? And I was like, nah, I don't think we do. I don't think we do. So Plan A is going to be gone pretty soon. Going to be crazy. And Scott, what's up, Scott? Learning to backtest with a simple EMA crossover is a great way to learn how to use Python. And that's how he started. Scott and I worked so hard on Plan A. Plan A is dead. Long live Plan A. Plan A is dead. So we're not even going to cover it anymore. So we need to reduce risk before adding any new trades. So Plan M, exit signals. OVTLYR sell signal. Let's start there. We have a sell signal on CVE. So easy peasy enough. Come through, see CVE right there, and just hit the sell button. So let's go into Tradier and let's do so. Portfolio CVE, send to ticket. And we'll do this, send a ticket, sell to close. Really two contracts? That doesn't sound right. You know what? I may have had an issue at the time. I didn't realize. Oh, anyway, let's close it. And okay, so we're out of CVE. Joe's going to post this in Discord. Okay, he's posting it right now. There's our CVE. I closed the 17 calls for 70 cents. So CVE did not work out. That was a trade that didn't work out well for us. We got a sell signal and it had a negative 53% return. Now, to some people, you're like, oh my gosh, a 53% loss. This is a big deal, Chris. I'm going to be bankrupt if you keep this open. This is a 3% hit to my portfolio. That's why I like to include the portfolio impact, okay? A 3% hit to the portfolio is nothing. You still have 97%, 96% of your account when something like this happens. No big deal. You just move on, okay? So that's the only one with the sell signal. Let's look at the other ones for any sort of bearish cross here. So NOG, I know I've seen some chatter about, hey, we got to close NOG right now. For me, NOG is not to my 2 ATR stop out point yet. That is at 22.89. The 10 still over the 20. There's no gap and crap, no earnings, no order blocks. So NOG's going to stay on for me. Now, I've also seen some chatter about WMB. Somebody was saying, hey, why haven't we closed WMB yet? Well, WMB came down to my 2 ATR stop, did not close under it because that's my rule, is to close under a 2 ATR stop point. And it's come up a little bit today. That's fine. We are actually still in a bullish trend. Sounds crazy, but we are still in a bullish trend. The 10 is still over the 20, and price is over the 50. Where's the 50? I got to put that back on. Boom. And price is still over the 50. So this is still a bullish trend. It is a pullback within a bullish trend. Will it continue up? Maybe. It did build a new order block right here, but we're going to ignore that because it's less than 120 calendar days old. So we've talked about NOG, talked about WMB, and we've talked about CVE. We already closed CVE. Now, let's go back to Zion. Zion ran into this order block earlier today, and my rule is that if it runs into an order block during the day, I go to midday emergency exit. So Zion ran up into this, and then it was rejected. Now, it recovered, but it was rejected. I got my alert, and you can see the rejection happen right here. It took me about 15 minutes to get to my PC where I could do this. So I actually sold it about right here, 59.26. So it's around 59.55 right now. That is my rule to close midday. So the 10 went under the 20, and I closed Zion earlier today. And I did this in the Outlier fund over here as well. You can see Zion 55 calls were closed, and we should be out of Zion completely. Yes. Okay. So Zion is gone. CVE is gone. Let's go to the next one. SYF. SYF has been running like crazy. Look at this beautiful thing. Oh my goodness. Woo, I love this. Can we roll SYF? Let's take a look. Can we roll SYF? Roll. Go to the options grid. SYF. So looking at SYF, we are currently in the January 80s. Can I roll to the 82s? That's the question here. Well, it's got plenty of open interest. The extrinsic value, 74 cents on 430. 74 divided by 430 means 17%. Yeah, let's do it. Let's roll from here to here to the 82.5. And I know we need to bump this down, so let's just try 165 to start. See if we can get filled, because I'm filling it for a credit. Still, oh, wait a minute. I was looking in December. Hold tight. I may have made a trading error. Let's see, 214 on 560. 38%. Cancel quick. Cancel quick. Cancel. Boom. Okay. Trading error. Trading error actually happened in real life, but that was unaffected. Now, how did that happen? I looked up here. I saw the little thing right there that shows you where your position's at. But I was not in that expiration. I was in December. So that was on me. Now, no harm, no foul. Thankfully, it wasn't filled. So I did not roll SYF. I would like to, but right now, the extrinsic value of where to roll to, the 82.5, is a little too high. 215 on 560. Again, 215 on 560 is 38%, which is more than my 30% limit. Let's go to the next one. Jeff. Jeff looks glorious right here. Maybe we could roll Jeff. Let's take a look at Jeff. Portfolio, Jeff. Roll. So on Jeff, we don't just have to roll up, we have to roll out, because this is December. December, we have to get out of everything by tomorrow, because the gamma risk explodes after tomorrow. So looking to roll from December to January, the same strike is going to result in a debit of 165. I'm not paying a debit. Let's go to Jeff real quick. I'm still in SYF. I'm not going to pay a debit to go from the 57 to 57. So the only way that I can get to a credit is by doing a roll up and out. So from the 57 to the 60, that would be a credit of 45 cents. All right, that sounds good. 212 on 560 is 37%, still too high on extrinsic value. And here's the deal. If I can't roll tomorrow, I have to close the trade. That's my rule, right? That is my rule that I've developed in my plan. 1 week before expiration. Am I already profitable? Yes. Can I roll out for a credit? Yes. But it doesn't meet my liquidity standards. So if by tomorrow it doesn't reach that point, I have to close it. That's the rule. So Jeff stays on for now. HBAN. HBAN ran up, hit this order block. Now, lots of people, thank you, pointed out that my order block settings, it didn't show on here. I don't know what I did wrong. Thankfully, Joe was like, Chris, click this button. I clicked it and I was like, okay, we're back in business. I was looking at something else apparently, but HBAN did have an order block and I did close it when it hit that order block earlier, and it has been rejected as well. So you can see right there, this happened roughly an hour ago, right at $18 rejected. And I don't know where it's going to land, right? It may continue down, it may continue up, but it's right at that order block today. So I'm going to take this off HBAN, and let's go take that off real quick. I know I'm going fast. I know I am. And let's go send to ticket. But keep in mind, right? This is execution time. We can do education time all the time. This is execution time. Let's go 195. Orders open. Okay, so I'm not filled yet. I'm trying to sell it, so I want to sell it for as much as I can. But if I'm not getting filled, then I have to go down, and I'm filled at 190. So I'm out of HBAN. Joe's going to post that in Discord right here. So I closed it after the rolling for $1.06, and it closed within 10 cents of the order block, which was a 60.52% return a 9.55% portfolio impact. So I grew my account in one trade by 10%. Now remember, we took off one just a few minutes ago. That was a 3% decline. This is why I like to put portfolio impact here, because net between the two, I'm up roughly 6% in my entire account on just 2 trades, right? Some people would say, just get used to that for the entire year. No. Let's keep going. So I'm out of HBAN. Let's go to HTGC. This one, not to a point that we could roll yet. We've already rolled it once. Lending Club. I don't know what it is, but Lending Club's going to come out with news here at some point soon. It's gone up over 30% in the span of a couple weeks. Just here's the thing. Price always moves before news. Carol knows. Carol's been trading long enough. She knows that price is always on the move because there are insiders who know what's going on. They're making their moves before everybody else gets the news. And it's buy the rumor to sell the news kind of thing. This is already happening. I don't know what it is. Doesn't matter what it is. Just go with the trend while the trend is trending. So I rolled LC earlier. Let's roll LC right now. We've got a couple minutes left, so I need to hustle, roll. And let's go over here. So rolling from January, still in January, from the 18 to the 19. And the 19.58 cents on 215 gives me 26% credit, which is perfect. I'm great for that. Let's do 75. Send that. Go to orders. It's working. Let's bump this down to 70. And fill that 70. Okay. And Joe's going to post LC. Where's LC? Right here. So early I rolled it from the 18 to the 19 strike for 75 cents in credit. And I added that right here. I've rolled this 3 times now. So I bought it for 273 minus 75 cents, 75 cents, and 75 cents each time. So that means I have 48 cents in credit on the trade. I've taken off, divided by 273, I've taken off 83%. I've taken off 82% of the risk of this trade. Pretty sick, right? Pretty sick. So let's see, is there anything else to do? We already talked about these 3. So that's everything I did. So that was the emergency exit on Zion, the roll in LC, the HBAN close, and the CVE close. So
you can look at NOG.
Yeah, we can look at NOG. You can see just how quickly you can get through your trading plan when you know what you're looking for, right? Kostya, what are you looking for, my friend?
I was at the airport when I bought this, so I didn't put my 2 HCR stop loss at the right place. So I just wanted to see, but I bought it at the same time as you. There we go.
There you go.
2288. We're still far away. Great.
Yeah, and like I say, this is still in a bullish trend. It's a pullback within a bullish trend, but I don't have a reason to get out yet, right? All we're doing is waiting. We're waiting, right? The money is made in the waiting. That's a Jesse Livermore quote. The money is made in the waiting to get in and the waiting to get out. So my account right now is up roughly 47% for the year. I'm around 60% in cash right now. And you know, we still have, how many trades do we have on? Zion's got 1, 2, 3, 4, 5, 6. So we have 6 trades on right now. 2 of them are working or not working, but the other 4 are working really well. So that is what it takes to be a successful fund manager, right? Is having a plan, executing the plan. And of course, I ran through that really fast because I needed to because of time, but also because I know what I'm looking for, right? And that is what's going to happen when you have your own trading plan. You're going to know X, Y, and Z, and then make it rip the whole way. So, kind of second half of OVTLYR University class. What questions can I answer for you guys? How can I help you out? In what way can I do things for you?
I have a question.
Go ahead, man.
For the homework, kind of the way I'm thinking about it, because I don't think I'll be able to develop a mature plan in 1 week.
No,
I'm gonna come up with hey, I'm gonna learn how to backtest as opposed to come up with a brand new backtest that's better than what you guys came up with already from like Plan A and Plan A. You know,
that's kind of the point, is teaching you to do the backtesting. Right. I don't expect you to come. I mean, honestly, you could backtest and you can come back and be like, Chris, I found a terrible, shitty, awful, no good, very bad plan that I would never trade.
Yeah, don't do that one.
No. That is a great result.
Yeah,
You know
absolutely.
why that's a great result?
I don't have to do it.
Because you don't have to do it.
Yeah.
That's a fantastic result. That's an amazing result. Thomas Edison figured out 10,000 ways how to not make a light bulb. And I guarantee you, he didn't go back and be like, okay, number 7,843. Let's just try it again. No. He was like, okay, that way doesn't work. I'm not going back there. You iterate, you grow, and the whole point of the exercise is learning to do the back testing. So I think that's great, actually. Go ahead, Charlotte.
I've been back testing the TQQQ, but using a 3 and 8 EMA crossover. How do I know that I'm not doing it too tight and I'm not retrofitting it and getting mixed results?
Okay. So what is the method of your back testing? Are you doing it manually?
Yeah, I'm literally just plotting it on the chart.
Yeah. I did that for years. There is nothing at all wrong with doing that. Just be honest with yourself as you're going through there, and don't cherry pick and be like, oh, I wouldn't have taken that trade. This one I would take. I don't know about that one. Right. I did that. Trust me, I did that. So
does it have to be right 100% of the time? Because the results I'm getting, it's right, but probably only 90% of the time. Like, is that good enough, or does it have to be 100%?
What does right mean to you?
That where my signals say to get in and get out are correct.
Okay. So in that case, it needs to be structured where if X happens, you do Y. If Y happens, you do Z. That makes sense?
Yeah.
So it is easier on a computer where the computer can run all those simulations for you. But I'm telling you, I did this for years. I did this literally up until this summer when Degum Scott Raff showed up in my life, changed everything for us. Okay. There's nothing wrong with manually backtesting, but you got to be honest in your backtesting approach, right? And it's super easy to be dishonest. So just do that and set a time frame, right? Be like, okay, I'm gonna look at TQQQ every time the 3 and the 8 crossover for the entry, and I assume the 3 and 8 crossover for the exit. It doesn't have to be that. It can be something totally different on the exit. For the scope of one calendar year. And then you're going to plot, okay, January 3rd it happened, January 7th I got out. Okay, February 4th it happened, February 19th I got out. Okay, that's what you're looking for. And then just plot that. But you need 50 instances. So if you go through one entire calendar year and you only have 17 instances, go back another calendar year, do it again. Go back another calendar year until you've filled it up, right? And then we've already talked about how to calculate expectancy. And it's basically taking your win rate times your average win, and then you subtract your loss rate times your average loss. So that'll give you your expectancy. Now, you want at least 50 to get a higher N value when it comes to statistics. That's what we're looking for here. So the more instances we can get, the closer we can get to that expectancy. Now, here's the thing. Number 51 in that instance might be the greatest trade of all time, change everything, or it could be horrible, right? Unlikely to be horrible because we're trying to get big wins and small losses. But like the more data you have, the closer you can get to that expectancy. So, Stocky Locky, did you have a question?
Yeah, I was just going to say, do the 50 instances plus need to be on one stock?
No.
Yeah, because my thing was with the weekly, looking at the weekly to get a setup. So I was just thinking there might be an issue with that potentially for a setup to show up.
No, I think that's actually really clever, right? Testing it across different stocks. I think I mentioned this earlier. Find random stocks, find random time frames, and then go for it. Okay. But again, be honest. Right? Yeah. I mean, you could find one stock that's amazing, right? It always works all the time on Apple. But if you apply the same thing to SoFi, it is total hot dog shit, right? You got to be honest with yourself. But that's actually a good reason, and you want to find a robust system. In fact, Scott and I talked a lot about robustness of systems because, right, you could find the very best system ever, but if it doesn't work on multiple stocks, then you found a great system that works on one stock. So you better be sure to follow it. I mean,
yeah.
All right. Anybody else?
I have a funny story about backtesting.
Yeah, what you got?
So this is slightly embarrassing. In the beginning of the year, I started learning options, and I got I went down the rabbit hole of YouTube gurus on the internet, and started doing all the complicated multi-leg options. And I think earlier today we had a video on that. So I still have the subscription to Option Strat, which is actually a nice website to learn about it.
Oh yeah, I
Um,
agree.
I don't have that subscription renewed anymore. And then I specifically got a membership at Tasty Trade to do the back testing. And I
Oh,
was putting so they actually have a really good engine. You can say, hey, during this time frame, here's your strategy. And I gotta be honest, I couldn't, with their backtesting multi-leg strategy, iron condors, spreads, I couldn't get a strategy to work. And I was like in the over 90% probability of success. And I couldn't understand why is it that when I say like, hey, this is going to be my strategy over 90% over all the stocks and options, because like they would backtest the actual options. I was failing every single time. I had a negative expectancy. I couldn't understand it.
I'm
Yeah.
actually not surprised.
Yeah.
Um,
Yeah,
that's
and like
really
yeah.
that's so funny. You built 90% win rate strategies,
over.
over
I had like
90% win rate
95,
strategies
98. Mm-hmm.
that basically had negative expectancy no matter what.
Pretty much. I mean, like maybe it worked in like a huge bull week or month. But if you do it over like, hey, COVID times, before COVID times, like if you do it over multiple instances, multiple time frames, complete fail every single time.
That's so interesting, Kostya. So I've
Yeah.
heard somewhere that the higher your win rate, like the average win rate, the more
Sure.
risk you end up taking.
Yes.
Where you could win 90% of the time, but if you win $100 and you're risking $1,000,
Mm-hmm.
which is probably not too far off, that's basically like an impossibility, because one
Yes.
losing trade is going to wipe out so many of those gains, right? And that's so funny, Kostya, man. I wish you had told me that sooner, because that's a perfect representation of why you don't break the golden rule of leverage, right? Huh.
100%. Yeah. It was embarrassing because I am, data driven person, and I'm like, why can't I figure this out? Like, I don't understand how, like, all these gurus are saying, oh, 80% plus, everything is great. And then like I'm a smart guy, I think, in my head, and I can't get it to work with the data on options, not even stocks. These are like you go to the guys who are the experts, and I did that, right? Experts, quote unquote.
Dude, that's the same feeling I had. I had the exact same feeling when I and I wish I could tell you what year it was, but at the end of the year I had the 84% win rate. I lost at that point cumulatively over $200,000. And I had to look myself in the mirror and I'm like, how am I the only person not making money selling these options? Am I really the only person not doing this? And then that's when I tracked down Steve Burns. I don't know how I got hooked up with Steve Burns. Like that was the greatest blessing of my life. And then he hooked me up with the market wizards that I worked with. But yeah, dude, like I lived that. You tested it. Chris lived
I put my
it.
toe in it.
Yeah.
My toe in it. I'm like, this makes no sense. Then I went to, I think I might have mentioned it privately. I started doing zero DTEs. Ooh, that was horrible.
Yeah. It's great while it works. And then when it doesn't, man, that just sucks. Sucks so hard. Oh, dude, thanks for sharing that story. Now, the thing is, Kostya, you have shared that with data and you learned the smart way. I did it with real money and I learned the stupid way, but there's still somebody who's going to listen to this and they're going to be like, oh, those guys don't know what they're talking about. And then they're going to go put on the trades and they're going to think they're geniuses for a while. And then when they blow out, they're going to be like, oh, okay, maybe there is something to this. It's going to happen. Right. That's the 25% I talk about that blow out their accounts and they come back and say, Chris made me sell my SoFi shares. Right. It's real. It's real. What else on y'all's mind? This is fun. Anybody else? Yeah. All right, cool. Listen, this has been fun. We covered a lot today. I saw Scott Raff say we're at new all-time highs on the SPY. Let's go to that. I just want to see it for myself real quick. New all-time highs. We broke through the order block. Outstanding, which means now if you're going to run plan ETF, you could run plan ETF after that point. New all-time highs on the market, new all-time highs in my account. I ain't mad, but also I had a plan, following the plan, executing the plan, and I still have risk out in the market, right? There is no guaranteed lunch at this point. We still got to make sure that we keep our risk in check and wait for those exit signals. But you know what? Maybe tomorrow with new all-time highs, we might see some new trades pull through. We'll see. So anyway, thank you guys so much for coming. I will see you in the next episode. We get to do it again. If somebody looking to save time, make money, start winning less risk, what do you think they should do? We're going to do the finger dance all over the place. You guys are the best. We will definitely talk soon.